Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy and specifically what's going on with the value of the ruble and what's happening with the price of Russian oil and what the impact of those two issues is having on the Russian economy. Now, traditionally, when you're looking at the value of a currency, it's directly linked to the strength of an economy. We've talked about this many times before. If your economy is doing well, and therefore lots of other companies and countries want to deal with the companies in your country, there'll be a lot of demand for your currency. And when demand goes up for anything, simple economic tells us that that will push up the price. And it's exactly the same with the currency. If there's lots of demand for the Russian ruble, then you would expect that the value of the ruble would be rising. And the reverse also applies. If your economy isn't doing well, if nobody wants to trade with you, if nobody's actually wanting your currency, then demand will fall and the value will fall. And that's what we saw happening to the ruble immediately following the invasion of Ukraine. There was a complete crash in the value of the ruble, and at one point it was trading for around 120 against the US dollar, and that compared to the long-term average of around 75. However, with currency, you can actually manipulate the price. And the Russian central bank stepped into the market and they started buying rubles, and that pushed the value up to around 50 against one US dollar, which was actually the strongest level that it had traded at since 2015. However, supporting the value of the ruble at that level proved unsustainable for the Russian central bank. And over the past 3 years, we've seen the value of the ruble falling back down again. And by the end of 2024, one US dollar was trading for 113 Russian rubles, which was actually the lowest level in Russia's history, excluding the spike that was seen immediately following the invasion of Ukraine. However, what's happened over the past 3 months is that we've seen a remarkable comeback in the ruble, and today one US dollar is trading for around 85 rubles. So applying the old logic that if your currency is strengthening, it means that your economy is doing well, that would lead you to summarise that the Russian economy is currently very strong. However, there are certain limitations about that theory. Firstly, it assumes that it is a free float, and what we're seeing at the moment is not a free float because the Russian central bank is stepping into the market and actually buying rubles to push the value up. And secondly, it assumes that all of the other countries in the world want to buy your currency. But obviously, because of the sanctions that are in place at the moment, most countries in the West have no interest in dealing with Russia. And even the countries that are trading with Russia, China and India, as being good examples, don't want to trade in rubles. They want to make their payments in Chinese yuan and United Arab Emirates dirhams. So that isn't increasing the demand for the ruble, and therefore the value of the ruble at the moment is only showing a very, very small market. There are a very limited number of countries that are interested in doing trade in rubles. Now, before we go on any further today, I want to talk to you about NordVPN, who I've partnered with for today's video, and who are offering Joe Blogs viewers an exclusive 4 months extra on a 2-year plan. Unfortunately, cybercrime is becoming a more and more common occurrence. And it's not just you and I who are being targeted. It was recently reported that multinational telecommunications giant BT Group had to shut down some of its servers following a ransomware attack by a gang called Black Basta. So it's never been more important to protect yourself online. And NordVPN offers a feature called Threat Protection that blocks access to websites known to host malware, including ransomware. So NordVPN is fantastic for protecting you every time you go online to make sure that nobody's hacking your passwords and can't steal your identity or any money from you. But it's also fantastic for opening up a world of entertainment because you can access movies and TV shows and sports events in areas that's not available to you normally. All you need to do is change your location and access all of that entertainment and information. And the fantastic news is that NordVPN is offering Joe Blogs viewers an exclusive 4 months extra on a 2-year plan, which you can access by going to nordvpn.com/Joe Blogs or clicking in the link in the description below. And the great news is that they're offering a 30-day money-back guarantee. The reason why exchange rates are so important to your economy is because they have a huge relationship with the cost of your imports and the price of your exports. So if we talk about imports firstly, At the end of December, $1 was trading for 113 rubles. So if you were importing something that was costing $1 in the international markets, you'd be selling that in Russia, excluding any tariffs and profit margin, for 113 rubles. Today, that same product, which is still only costing $1 in the international markets, would be selling in Russia for 85 rubles. So that represents a reduction in price for Russian consumers of 25%. So the strength of the ruble is good news if you're importing things and selling them into Russia. However, interestingly, despite the fact that we've seen a 25% appreciation in the value of the ruble over the last 3 months, we haven't seen inflation coming down. In fact, inflation has been going up. This chart shows Russia's official rate of inflation over the past 12 months, and as you can see, in December 24, inflation was running at 9.5%. It increased in January to 9.9%, and the latest figures that we've got for February show that it's increased further to 10.1%. And when you compare that to what's been happening with the exchange rate, you can see that the Russian ruble has been strengthening significantly over the past 3 months. So you would have expected there to be some release on the pressure for inflation. Potentially, we should have seen inflation going back down, but that hasn't been the case. And the main reason why the strengthening of the ruble hasn't resulted in a reduction in inflation, as we discussed earlier, is because most countries that are still trading with Russia don't want to deal in rubles. So the movement in the value of the ruble isn't actually having a direct relationship with those trading partners. It is making those products cheaper to be sold into Russia. However, as I said, I don't know what's happening with regards to Russian importers, whether they're adding more profit margin, whether the Russian government is taking more tariffs out of those products to actually get some more revenue into the central government. So in theory, the increase in the value of the ruble should be resulting in lower prices on the shelves in Russia. But I think in practice, that isn't actually translating. In normal circumstances, the strengthening of your currency will result in an increase in the price of your exports. So if we take an example of a Russian product that's priced at 113 Russian rubles, back in December, that product would have sold in the international markets for $1 because at that time, the exchange rate was 113 to $1. That same product today would be selling for $1.32 because the ruble has appreciated by 25% since the end of 2024. So theoretically, the increase in the value of the ruble is bad news for Russia's exports. However, most of Russia's exports are commodity products such as oil and gas and coal, and the price of those commodities is set by the global markets. So the movement in the value of the ruble doesn't actually impact on the sales price. Russia is selling its oil at the level that it can get away with, basically where the global market is trading. And if we look at this chart, which shows the movement in the price of Russian oil over the past 12 months, you can see that 12 months ago, Russian oil was selling for around $85 per barrel. However, today, it's dropped to around $65. And you can see that over the past 3 months, since the end of 2024, there hasn't been a significant increase in the price of Russian oil. And that's because the sales price of Russian oil isn't directly linked to what's happening with the Russian ruble. However, despite the fact that the value of the ruble and the price of Russian oil don't have a direct relationship, there is a sting in the tail for all Russian businesses because they have to report their results in Russian rubles. So what that means is although they may be getting paid in US dollars or euros or Chinese yuan, for their accounts, they have to translate that into Russian rubles. So they will have to exchange that foreign currency into Russian rubles. And in fact, that's one of the things that President Putin brought in around 2.5 years ago to make sure that there was strong demand for the ruble within Russia. Most Russian companies have to convert the vast majority of their foreign currency back into Russian rubles. So if we look at an example, Russian oil is currently trading at $65 per barrel. And back in December, when the ruble was trading for 113 against $1, if you were translating 1 barrel of oil into Russian rubles, it would have equated to around 7,300 rubles. Today, because the exchange rate has fallen to 85 to $1, that same $65 would only translate to 5,500 rubles, which is a 25% fall in income. So Russian companies are seeing a huge reduction in their revenue being reported in Russian rubles. So that's obviously bad news for those businesses because they're seeing their revenue going down at the same time as their costs are going up. We looked earlier at what's happened with inflation, but if we now look at this table, which shows the movement in real wages in Russia over the past 12 months, you can see that there's been a significant increase in wages. The scale on the right-hand side of this chart actually starts at 5% at the bottom. And the most recent figures that have been published by Russia for December 24 show that year on year, real wages increased by 11.3%. And that's on top of inflation because real wages exclude inflation. So if we add in the actual inflation figure of 9.5% for December 24, the actual year-on-year increase in wages was 20.8%. So Russian businesses are currently facing the double whammy of reducing revenue and increasing costs. But it's not just Russian companies that are struggling. The Russian government have also made certain assumptions in terms of the full year budget for 2025. This table shows the assumed exchange rate and the price of Russian oil per barrel included in the Russian budget for 2025. And as you can see, the exchange rate was assumed to be 96.5 compared to the current rate of 83. So there is a huge difference between where it's trading and where the Russian economy was expected to be. And in terms of the price of oil, it's assumed that over the course of 2025, Russia will sell its oil at $69.7 per barrel. However, in March, that price fell to 58.14. Now, obviously, oil prices are moving around a lot at the moment because there's a lot of talk of tariffs being applied by the USA and potentially even against Russia, increasing secondary tariffs on everybody that's dealing with Russia if Russia doesn't agree to some sort of ceasefire. So we don't really know where the price of oil is going. However, if it comes in significantly less than Russia's assumptions, then clearly there will be a large deficit on the Russian budget, and that could be made significantly worse by the exchange rate between the ruble and the US dollar. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening in Russia right now is really quite fascinating, and I get lots of messages from people all the time saying that what's happening with the value of the ruble is directly linked to what's happening in the Russian economy. So the fact that the ruble has strengthened significantly over the past 3 months means that the Russian economy is now on the up. And ordinarily, I would agree with that logic because the currency is usually linked to what's happening in your economy. We've spoken a lot about Argentina and Turkey on the channel, and over the past few years we have seen the currency for both of those countries tanking. It's fallen in value significantly, and that's linked to the fact that there's been an economic crisis in both of those economies. However, what's going on in Russia right now is quite different because the link between the Russian ruble and the Russian economy has been broken, and the reason why it's been broken is because the countries that are still trading with Russia no longer want to deal in rubles. So China and India were the two biggest nations that stepped in and filled the gap that was left by the West. They've been buying lots of oil directly from Russia. However, China didn't want to support the ruble because China wants to promote the Chinese yuan as being the second biggest currency in the world behind the dollar. That's what it'd like to achieve. And in order to get to that situation, you need lots of other countries using your currency. So China said that it would only continue buying lots of oil from Russia if it could pay in Chinese yuan. And obviously, from Russia's point of view, it can use that yuan to buy things from China. So the trading relationship between the two countries has increased significantly over the past 3 years. Now, from India's point of view, they also wanted to use their own currency, the Indian rupee. However, Russia didn't want to do that because, firstly, they're not buying a lot of things directly from India, and secondly, not many other countries around the world want to trade in Indian rupees. So as a compromise, India was paying in Chinese yuan and United Arab Emirates dirhams. So what we're seeing is, despite the fact that Russia is still doing large amounts of trade, it's not doing a lot of trade in rubles, and therefore the value of the ruble isn't really linked to all of that trade. The market for the Russian ruble has shrunk significantly over the past 3 years. That's one of the reasons why the Russian central bank is able to manipulate the price, because it's much cheaper to do it now, because it's a much smaller pool that it's having to play with. So what we've seen happening to the value of the ruble isn't directly linked to what's happening in the economy. So we have got a disconnect. So I don't think people are correct when they're messaging me saying the value of the ruble's gone up, therefore the Russian economy is doing really well. And what we've talked about in today's video is that there is a serious issue now, because the value of the ruble has gone up and all Russian companies have to report their results in Russian rubles. And also because of the directive from President Putin, they're actually having to exchange foreign currency back into rubles. Around 85% has to be translated back into rubles. They're seeing that having a direct impact on their financial results. And the 25% strengthening of the ruble in the past 3 months means that the actual ruble value of their sales is going down. That means that their profitability will go down and therefore they will pay less tax. So all of that is really bad news for the Russian economy. And what we also saw is that the assumptions made for the 2025 budget by the Russian authorities assume that the exchange rate will be at a much higher level, around 96 to the US dollar rather than 83. So it will have the same impact on the revenue being declared by the Russian authorities. And in the same way, we've also seen a reduction in the price of Russian oil. And that's come in significantly below the expectation for the whole of 2025. And if that continues, then we will see Russian revenue being below budget. And all of this means that Russia will be declaring a larger deficit and will have to take on more debt or take more money out of the National Wealth Fund. And if you follow the channel, you'll know that I recently posted a video talking about the fact that the Russian National Wealth Fund has reduced significantly over the past 3 years. It's now down to less than $40 billion, compared to around $300 billion for the liquid assets at the start of the war. So the overall summary of today's video is that whilst we've seen a strengthening in the value of the ruble over the past 3 months, that doesn't tell us that the Russian economy is doing well. In fact, it's actually bad news for a lot of Russian businesses and the Russian authorities, because when you translate all of your income back into rubles, it's reducing at a time when costs are increasing because inflation is still in double digits and we're seeing a huge rise in wages. And all of this represents bad news for those Russian companies and ultimately for the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks, thank you for that, really appreciate it. And if you're a long-term supporter, either through Patreon or YouTube membership, thank you for that. It really helps to keep me motivated and helps to keep me posting as many videos as I can. And here's something to put a smile on your face.